Your condo association's insurance just doubled. Now what? This isn't some overblown headline or hyperbole meant to scare you. That's what thousands of condo board members across the country are waking up to. In Florida, premiums are doubling and in some cases tripling overnight. In California and Hawaii, some communities are now paying 900% more than they were just 2 years ago. And here's the kicker. It's not always because of some big disaster. It's because the system is broken. And when I say the system is broken, I'm talking about the breakdown across the entire condo insurance landscape, from underwriting and regulation to maintenance incentives and market stability. Not a single problem, but a chain of failures. So here's an example. The insurance underwriting model is outdated. It often relies on broad regional risk models, not property-specific data. That means well-maintained communities get lumped in with poorly maintained or high-risk ones. Another reason is there's a shrinking pool of carriers. Insurers are pulling out of entire states, like Florida and California, leaving associations with little choice but to buy expensive, limited coverage from surplus line or even state-backed carriers. Another reason is deferred maintenance and poor reserve planning have been ignored for far too long. Many boards have been incentivized to keep dues low rather than fully fund reserves. Until recently, there were few consequences. Now underwriters treat the lack of long-term planning as a direct liability. Another reason is state-level regulatory frameworks are inconsistent and reactionary. Florida's SUR law is a well-meaning reform that some say came too late, and it placed heavy burdens on boards that were already behind. And it's just one example of how inconsistent state laws can be. In one state, reserve funding might be required by statute. In another, it's optional. These differences affect how associations prepare for repairs and how insurers assess their risk. The patchwork of laws across the country creates confusion, compliance gaps, and inconsistent insurance outcomes for similar buildings in different zip codes. So when I say the system is broken, I'm pointing to a deeply flawed cycle, one that punishes responsible boards the same way it punishes negligent ones. And it leaves everyone with fewer choices, higher premiums, and more uncertainty. If you're a condo board member, I want to speak to you directly because this isn't just about insurance, it's about the sheer stress of managing communities when the rules keep changing. And all those costs feel completely out of your control. You're probably asking questions like, why is our premium skyrocketing when we haven't had a claim? Or why are we being lumped in with higher risk buildings that don't look like ours? And why does it feel like the insurance market is working against us? It is. It's frustrating, it's certainly unfair, and it's expensive, but there is a reason behind it. Let me tell you about a condo board in Hawaii, a well-meaning group that had always kept their dues low to keep residents happy. They delayed a few non-critical repairs, sure. Roof was aging, yeah, not a problem. Plumbing had a few leaks, nothing catastrophic. Then the Maui wildfires hit. Not their building, but close enough to rattle the entire insurance industry. At renewal, their insurer walked away. Their broker scrambled. They ended up on the secondary market, and their premium reportedly jumped from around $30,000 to over $375,000. Their story has been echoed by multiple board members and agents across the country. While individual numbers may vary, the theme is consistent. Deferred maintenance plus market volatility equals massive premium spikes. So why is this? It's not because of one bad claim, but because insurance underwriters saw risk in every small delay they made. And here's the brutal truth. Deferred maintenance is now seen as a liability by insurance providers. If you don't have a system to track, plan, and fund your long-term repairs, you're just simply a red flag. All right, now that we've looked at the big picture of how the insurance system is breaking down, let's zoom in and get a little more specific. These next 4 points aren't about the broader system, they're likely the direct triggers of why your premiums might be going up right now. Let's break it down. These are the 4 main reasons condo insurance costs are exploding. Number 1, climate disasters are more frequent and severe. Hurricanes, wildfires, floods, hailstorms, you name it. These events are seemingly happening more often, and they're hitting population centers more than ever. Insurers have paid out billions in claims and now are raising rates or pulling out of high-risk areas like Florida, California, and Louisiana altogether. Number 2, inflation has made rebuilding way more expensive. Construction costs have surged. That means the cost to replace or repair damage is significantly higher than it was even just a few years ago. So insurers are updating the replacement values on buildings, and when that number goes up, so does your premium. Number 3, aging buildings and deferred maintenance. Many condos are decades old. When insurers see older roofs, outdated plumbing, or a history of water leaks, they start getting nervous. Even if you haven't filed major claims, they view it as only a matter of time before you will. Number 4, there are actually fewer insurance companies willing to write these policies. Some have got out of business, others have exited high-risk markets. That means less competition and higher prices for the communities that are left behind. So if it feels like the deck is stacked against you, that's because in many ways it is. Now here's the good news, you're not powerless. Astute board members are getting ahead of the curve by focusing on risk transparency and long-term planning. That means keeping detailed records of every maintenance project, following through on reserve study recommendations, conducting regular inspections, and funding repairs before failure, not after. These boards are showing insurance carriers that they're not just hoping nothing goes wrong, that they're actively managing the risk. Now, earlier I'd said that well-maintained communities often get lumped in with higher risk ones, and that is true. That's the default. But what long-term planning and documentation do is help your community stand out from that default. You're still in the same risk pool at first, but with strong records, proactive maintenance, and a current reserve study, you give your broker and carrier the evidence they need to rate your building based on its own merits. It doesn't mean that your premiums won't go up, but it does mean you have leverage to push back, negotiate better terms, or at least avoid the steepest increase. But here's what we do know. Communities that follow their maintenance schedule, invest in upkeep, and proactively fund repairs tend to file fewer claims and have a better shot at negotiating with their carriers. And more importantly, they're protecting their building from catastrophic failure. At Solume, we've built a platform that helps boards manage their reserve study and long-term maintenance strategy with precision. Instead of trying to piece together information from outdated PDFs and missing spreadsheets, Solume gives your community a digital command center for all things capital planning. You can track repairs and improvements. You can explore financial strategies to prevent special assessments, store inspection reports, log reserve contributions, and even update timelines in real time. It becomes your community's proof of performance, so to speak. Listen, if you're concerned about a massive premium hike or just want to get ahead of the next one, book a 15-minute call with someone from our team. We'll show you how Solume helps boards like yours make better, faster, and more defensible decisions. You don't have to be at the mercy of the insurance market. You can manage smarter and you can protect your community, and we can help.